Hello. Our last step in the process of preparing the worksheet and the adjustments is to record the adjusting journal entries in the general ledger. In this video, I'll talk about what accountants have to do to record the adjusting journal entries. Remember, a worksheet is just a tool that accountants use. It's not a formal financial statement. It's more of a simulation or markup. It's very important that the adjustments shown on the worksheet become part of the permanent accounting records. Otherwise, our general ledger would not agree with our financial statements. First, we'll write the header adjusting entries into the description column. And in most companies, there will be a special journal entry type that you use to record the adjusting entries in the accounting software. Why? So that the system knows to put the adjusting journal entries into the adjustment columns of the worksheet. On the next line, we'll start with the first adjusting journal entry. Do you recall the first adjustment we made? We recorded that $500 in supplies had been used up in the month of December and wrote $500 into the debit column for the supplies expense account on the worksheet, and a credit of $500 into the credit column of the supplies account. So to record that entry in the general journal, enter the date into the date column, and then write the first account supplies expense into the description column and the amount of $500 into the debit column. On the next line, you slightly indent and write supplies on the description line and $500 into the credit column. The posting reference column is blank right now because we have not yet posted the entry into the general ledger accounts. But once we post the entry to the general ledger, we'll write the account number into the posting reference column. Let's talk about the next transaction. We had prepaid rent for December and January for $8,000. And now that December ended, we had to record the rent expense. We wrote $4,000 into the debit column for the rent expense account on the worksheet and a credit of $4,000 into the credit column of the prepaid expense account. To record that entry in the general journal, we write the date into the date column, rent expense in the description column, and $4,000 into the debit column. On the next line, we slightly indent, write prepaid rent into the description column, and $4,000 into the credit column. We're now ready for the last adjusting entry. We had purchased equipment and calculated monthly depreciation for the equipment. We wrote $183 into the debit column for the depreciation expense account on the worksheet and a credit of $183 into the credit column of the accumulated depreciation equipment account. To record that entry in the general journal, we'll write the date into the date column, depreciation expense equipment into the description column, and $183 into the debit column. On the next line, we slightly indent and write accumulated depreciation equipment into the description column and $183 into the credit column. So now let's get ready to post these three entries to the general ledger. Our first journal entry, let's look at the two accounts, supplies and supplies expenses, that are listed in our journal entry. Let's write the date into the date column of the supplies expense account, adjusting into the description, the journal entry page J3 into the posting reference column, and $500 into the debit column. This account has no prior activity because the balance before this entry was blank, and therefore the new balance is $500. We write that into the debit column of the balance section. The account we now need to credit is supplies. This account already has activity and a balance of $1,500. Let's write the date into the date column, adjusting into the description, the journal entry page J3 into the posting reference column and $500 into the credit column. We now need to calculate the new balance, which is $1,000. For our second journal entry, let's look at the two accounts, rent expense and prepaid rent, that are listed in our journal entry. Let's write the date into the date column of the rent expense account, adjusting into the description the journal entry page J3 into the posting reference column, and the debit of $4,000 into the debit column. This account had no prior activity, and therefore the new balance is $4,000. The account we now need to credit is prepaid rent, and the account already has activity in a balance of $8,000. So let's write the date into the date column, adjusting into the description the journal entry page J3 into the posting reference column, and the credit $4,000 into the credit column. We now need to calculate the new balance, which is $4,000. For our third journal entry, let's look at the two accounts, depreciation expense and accumulated depreciation, that are listed in our journal entry. Let's write the date into the date column of the depreciation expense account, adjusting into the description the journal entry page J3 into the posting reference column, and the debit of $183 into the debit column. This account has no prior activity, and therefore the new balance is $183. The account we now need to credit is accumulated depreciation. Let's write the date into the date column, adjusting into the description column the journal entry page J3 into the posting reference column, and $183 into the credit column. This account has no prior activity because the balance before entering this transaction is blank, and therefore the new balance is $183. What do we have to do next? That's right, we need to write the account numbers into the posting reference column of the journal entry. Where do we find the account numbers? They're listed on each general ledger account next to the description. Now we've completed all of the steps involved in preparing the adjusting journal entries and the worksheet.